previously started a lending company, so a B2B lender. I personally went through all the horrific problems that most of our audience will probably face in terms of having to onboard clients remotely, and ComplyAdvantage is the solution that I wish that we had had at Market Invoice, in terms of being able to understand if the person applying for a loan is actually a fraudster, a terrorist, a money launderer. But I think both Onfido and ComplyAdvantage are kind of definitely what companies need if you're lending to people remotely during a pandemic.
Right. Charlie, let's stick with you then, since you have experience in the lending space prior to this too. Is how can digital identity sort of change the future of, like you said, onboarding, verifying, et cetera, for lending companies, which is obviously a lot of our audience here at Lendit?
So I think part of what makes the lending space so exciting is that we're having to reinvent everything from scratch. As in, if you go back, not even 6 months, but maybe 6 years, you wouldn't have had the real scale of online lending that we have today. Everything would be physically going into a branch, showing a passport, and then talking to someone about a loan. Whereas you now have something that's far more powerful than a bank branch, with far more sophisticated tools, with way more AI and machine learning and technology in the palm of your hand. So the full range of lending, but with that comes complexity, as in you have to reinvent the entire stack from scratch. So you have to be able to understand, is this person who they say they are? Then are they creditworthy? Are they a fraudster? Because I think the thing that I faced when lending money, so market finance now lent how many $1 billion, was that someone you never met before, and someone you'll never actually meet. You have to decide, are they worthy of receiving $1 million payment the next day? And in a competitive space, and you don't really know if they've been heavily impacted by the pandemic, if they're about to go bust, if they have 10 other creditors chasing them. There's just so much complexity you have to deal with, and the potential losses are so huge. And particularly if you're a marketplace lender, it isn't just one bank you have to satisfy. If a loan defaults, then you have 100 other investors chasing you for that money. So I think many of the audience will know the terror and pain that goes with defaults. So yeah, I think the most thankless cause of default is fraudulent identity.
Got it. Husayn, what about you on this front with Onfido?
So for us, it's not too dissimilar from Charlie, and we're lucky enough to be partners, and sort of we are a reseller of the checks you get through ComplyAdvantage as well. And in essence, we could see that the world is moving online. More and more businesses are moving online, especially lenders. And because, as Charlie said, you don't get to see the customer face to face. You need to find a way of knowing that is the person who they claim to be, to stop impersonators and fraudsters. And secondly, sort of are there any sanctions lists, or are there any watch lists? So with our approach on identity, what we saw that was available to lenders historically, one option was to see people face to face, but that doesn't scale too well and it's not convenient. An alternative historically has been the credit bureau model. The challenge with the credit bureau model, it's served an important function over the last 150 years, but given the data breaches, your SSN or date of birth, name, address, all that is pretty much on the dark web, so it doesn't offer that much security. Hence, we could see that using a government ID and facial biometric, not just makes it more convenient, it also gives you access to more people and gives that security, given that historically these have been the key things that are holding back the industry. And just to put to the scale of fraud, according to the United Nations, up to 5% of the world's GDP is laundered money. That's almost $2 trillion. And $2 trillion of laundered money is used in human trafficking, drug trafficking, terrorist financing, and all these other things. The problem is that 99% of that goes undetected. Mm-hmm. This is money laundering particularly. So we looked at the industry and we could see that there's only a 1% success rate. Despite the awards and everyone celebrating the security world and how wonderful we all are, when you look at the numbers, the industry is not doing well. Which other industry do you know of that has a 99% failure rate? So it was very clear that this is a big problem. There's a long way to go, and essentially it's crying out for machine learning and new technological approaches to be able to solve it.
Right. Let's stay with you on this too, because earlier I mentioned that we have had a global pandemic this year with a lot of things moving online because people literally can't leave their homes safely. They're worried about getting this disease, exposing others, etc. How has that impacted your business and how you guys are prioritizing different things? Because this is something that has, hit every business, from someone big, someone small, both in good ways and in bad ways. So how have you just managed that, both from managing your team as well as managing how you guys are going to market and thinking about the future?
So if that's to me first, there are two parts. So in essence, internally, we've made some adjustments. 10% of the company worked remotely before this. Now 100% are working remotely. There's a lot of focus around adjusting and adapting, but we're lucky. I mean, companies that are essentially startup, scale-up stage, change is kind of second nature. It's in the DNA. So I'd suggest startups and scale-ups are inherently more suited to times of change and then sort of maybe very large, more established companies. As part of it, internally, externally, we're naturally doing remote identity verification in an increasingly remote working world. So we've been able to get involved with new use cases. The move towards a cashless society has increased. The move towards digital access, so you're not touching dial pads and so on. If you want to access a building, you can just go through with your digital identity. The health passport or immunity passport use case, there are new use cases that we've been more focused on. But as a team, given that the company mission is to create this open world where identity is the key to access, we'd like to think that what we're doing is as relevant and as important, in fact, more so than even before COVID.
Charlie?
Yeah, I guess from our side, we've kind of tried to release lots of new features which kind of could help different lending companies. I guess the world's been hard enough for companies who are lending, and I guess that's both on the kind of credit default side, but also on the fraud side. So I think there have been various estimates in terms of the kind of sheer size of government loans being granted through fintechs and other lenders, and I think a huge portion of those will end up either in default or having issues with fraud. And therefore, what we've kind of tried to do in terms of changing the company is, I guess, offer more data around which potential loan applicants are linked to different fraud entities, and therefore, when they are applying for loans, you are certain they will default. And then also, I guess, those companies that are also in financial distress. So if a company is applying for a loan, I guess through adverse media, you can detect that they are in difficulty. So I think of all the sectors that's been hit in fintech, probably lending has been the worst hit. And therefore we kind of tried, I guess, given our knowledge of the space, to kind of explicitly help those lending companies.
So Husayn, you mentioned earlier that 2 trillion is money laundering every single year. How much of that can actually be fixed? Like, how low can you get that number?
That is a good question. There's a distinction between fraud and money laundering. So fraud is if I take your credit card and then a few weeks later you'll get a bank statement and it'll say, hey, I didn't spend that money. You'll tell your bank and they'll cut me off as a fraudster. That process typically, it's about 50% of that is caught eventually. Whereas money laundering is, I'm the fraudster, I've now taken $10,000 from your account, I need to go and launder that. So I might go and play a game of poker with Charlie, and he's sort of a cousin of mine, and I purposely lose that money to Charlie. Charlie cashes that out, and we both walk away from the game, and no one really finds out. So that's why 99% of money laundering goes undetected, or up to 99%, which is the United Nations figure. So the challenge that we have, your question on how can we tackle this? What we saw, and what seems obvious, is that when a fraudster goes and tries to cheat a business and they're caught, they don't go home and reconsider their career path. They just go and try again and again with different businesses. So what we've done that's a bit different is not just us, other technology partners, including the likes of ComplyAdvantage. We sit in the middle of all the different businesses like lenders. And when a fraudster tries to cheat our system, our machine learning models learn from that attack vector. And so the system becomes more secure for all the other clients. And so it lifts the bar for fraudsters trying to cheat the system. And unfortunately, we're like an antivirus software, where we can't commit to catching every single virus, but what we can commit to is catching more than the human approach, and definitely more than sort of alternative approaches, And there's always going to be the most sophisticated fraudsters that will cheat the system. But that's why these feedback loops with clients are important, so that the mid-layer and sort of definitely the unsophisticated ones are easily caught. And that's the current focus. So it's never eliminating, although that is the ambition. It's going to be hard. It's working up to make this significantly harder than it is right now, because right now it's more or less, it's not too difficult, as you probably figured from the news and what we all read and see.
Right. Charlie, on this front, I'm sure there's some companies that are trying to internally do a better job at detecting fraud and whatnot. What is the advantage, and who is like the target for you guys to be able to come in and do a really good job of helping them versus them trying to build something internally?
So I think what we build, they would never really try and build internally. So what we're trying to do is index every person and company in the world who could be a threat. So, you know, there's 8 billion people out there, companies, linkages, and there are kind of hidden risks, right? So it could be that Husayn himself is fine, but then he's linked to a high risk drug mule, right? So and we would know that that Husayn has that linkage, right? So I think the real challenge has always been the kind of false positives and the efficiency and effectiveness, as in I think if you look at fintechs and lending companies, their biggest team, probably equal with customer success or customer service, is compliance. As in, virtually every company listening will have probably by far their biggest cost and headcount invested in precisely what Husayn and I provide. And I think the reason that we started the company was because in transitioning from a branch-based model to the internet and smartphones, it's still one of the big unsolved challenges, but we both believe with AI and machine learning, Husayn has built an amazing solution for facial recognition, and we built a great solution for tracking and linking and optimizing, searching through, is this person a terrorist, a money launderer, a criminal, a fraudster? And that's why we believe what we built is the future of compliance.
Mm-hmm. Right. So which areas of fraud do you guys see yourselves as being able to have the biggest impact on and really cutting it down? Because there's fraud where someone steals my identity. There's fraud where someone just makes up a person. The fraud can be for a different purpose. Husayn, where do you see you guys being able to really hone in on and make it so that like shrinks dramatically?
So one thing that is unique about fraudsters is that the one area that they have in common is identity fraud, because no fraudster wants to get caught, and that's why, regardless of the fraud type, money laundering, straight up fraud, card chargebacks, or any other cyber criminal activity that you can think of, the common denominator is they all start by trying to hide their identity or impersonate someone else, so that if law enforcement finds out, they are able to essentially have a cover. And so the answer to your question is essentially across the whole thing. As far as where can you have the greatest impact, for us predominantly, over 90% of our current use cases at the account creation stage. When you want to sign up, you show your government ID and your face. We verify it's genuine and that your face matches it when you register. Less than 10%, but growing, is the ongoing authentication. So on the Monday, you create the account, and on the Wednesday, if you get locked out or you want to reset your password or you want to take out another large sort of sum of money, you have to show your face again, and that face is compared to the face that was registered on the account on the Monday. That's ongoing authentication. So in some ways, it's across the board as far as fraud goes.
Got it. And Charlie, if whether someone's using you guys or not, just in an era where both consumers and businesses are doing so much more online, like what do you tell people to do in order to better protect themselves online, both like from a business standpoint as well as a consumer standpoint?
So I think a big challenge once you've been accepted into the system is then how do you know who's behaving well? So lots of the fintechs now have massive scale, so they'll have tens of millions of clients, and so I guess there's a two-phase thing. Firstly, which of those clients become bad? So it could be that tomorrow Trump sanctions them, or they become a Venezuelan weapons dealer. So the key thing is you get an alert when you're monitoring them saying, listen, these 10 clients are now toxic, or they've now become a fraudster. The person you onboarded yesterday is now bad today. But then also the kind of transactional behavioral analytics, if they're making payments to bad countries or in suspect currencies, or the pattern behavior, the kind of transaction monitoring behavior is suspect. So I guess the thing I didn't like about running a lending company was I was the kind of BSA AML officer, and I had personal liability, as in I would have gone to jail if something had gone wrong. And we saw last week with the FinCEN SAR leaks, all the leaks by the big banks got published in BuzzFeed elsewhere, and yeah, I think that just shows you that there are huge challenges that lending companies have to deal with every day, and often you can't just shut them down because law enforcement want you to allow them to transact, such that you can look at their behavior, and then only then, once they have a case, can they actually arrest them. So if it wasn't hard enough trying to make money and interest income on loans, you also have to run law enforcement for the police and the FBI.
Right. Husayn, what about you?
Yeah, it's across the same lines. It's like the way that the industry is going, unfortunately, fraudsters aren't going to dial it down. They're just continuously going to get more sophisticated and use sophisticated tools. So as a community, it's a case of continuing to share best practices and focusing on using the tools that we can to streamline and be able to scale, and give, most importantly, the best customer service possible and customer experience possible without compromising on the risk and the compliance side, which is what I see as our task. Certainly ComplyAdvantage and almost any other reg tech that is supporting the fintech and especially the lending community.
Got it. One last question, then I think we're going to take audience Q&A. Charlie brought up Trump earlier, and that kind of reminded me that we have this election coming up. And much like people don't want to go to branches for things anymore, people are a little skittish about going out to vote. And then there's this whole thing about mail-in voting, whether that is actually going to like go through, how not to mess it up. How could digital identity help with that? Husayn, do you have any thoughts here?
So similar to the credit bureau model, it had a function, but it's sort of 150 years old. Equally, the US voting system, it goes back a couple of centuries. And the fact that it's a Tuesday has a historic reason for it, because it almost took about a month for it to be counted all the way sort of a couple of hundred years ago. Now, the challenge is that we are used to having the best experience and convenience, access to services all the time. If you can sign up to and get a large loan online or open a bank account, then why can't you vote online? So and it started in some countries, digital voting, it increases participation, it makes it easier, and all those good things that come from it. So the hope is that there's a lot of activity in the last 6 months, as you probably expect, gaining interest in this, and we have a few partnerships that we've sort of written about. So my hope is that in the next cycle in the US, there'll be a growing proportion of digital and easier voting, so that we can make this whole democratic exercise accessible to even more people.
Yep, for sure. Yeah, I just mailed in my ballot and all the things, like you have to use the right color pen, you have to make sure you sign the back, you have to make sure you seal it. Like there's going to be so many people that mess it up and their votes can't be counted, like let alone getting lost in the mail. So let's hope you're right, and next election cycle we're saved from that.
It seems very, very turn of the century, and I mean last century, to have to match one's pen to the demands on a form. So, you know, as a patriotic American, I will sit here and say, it can't come fast enough. Please, guys, get to work. So, a couple of questions from the audience here. Thanks so much, by the way. Great panel, great interchange.
I'm not sure they have time to take audience Q&A because they got to get to work on fixing democracy. So.
Yeah, we got to get, no, we're going to close this off short so they can get back to work. So a couple of questions here from the audience. One is just on false positives. Is this the most challenging problem you faced? It sounded like you were leaning that way, Charlie, but at least this audience member wasn't clear.
Yeah, I think the challenge is for many fintechs, lending companies, often the team will expand. It's a huge expense, huge cost that really kind of slows down onboarding all different clients. So I think in the short term, false positives, but the kind of flip side of that is the kind of false negatives, as in as you've seen with the kind of FinCEN files and other press recently, Deutsche Bank were fined billions of dollars for lending money to Jeffrey Epstein. So if you are people who are trafficking underage people from overseas or if they are taking money from weapons dealers overseas. A big part of the election and the concerns there is linked to corruption, bribery. I think the only thing worse than getting lots of false positives is getting false negatives, missing the people you should have had, and then getting billions of dollars of fines and potentially being shut down or going to jail. So I think of all the panels today, I'd argue that the one we're talking on now is by far the most consequential, because it's life or death, and the reputational damage is catastrophic if you get it wrong.
That is that is well said. Darn near a mic drop, and you're actually holding a mic that you could drop if you wanted to. Another question before we part. What else can you do with facial recognition? Are there other areas, for example, trustworthiness, that you can tell through a person's face? Interesting question.
So I suppose I don't know, and I don't believe, even if it could be done, I don't believe it should be done. There is a sort of, kind of, I don't know, maybe I misunderstand the question, but it's hard to tell from someone's face. It's kind of like the data that Charlie has run. Go ahead, Charlie. Maybe
if someone has a mullet or a very aggressive haircut, then you shouldn't lend to them.
Sure. There is, in fact, one thing I can remember right now that's relevant for lending. Right. So the technology does exist, that when you're registering for a service, you show your ID, you show your face, and usually we ask for like a 5-second recording of your face. The technology shows that if you seem to be anxious or under stress. And so maybe there's someone next to you forcing you to take out money. So we don't deploy that technology. I'm aware that it exists, and that might be the answer to the question, because in the future, that might be a feature that comes out. Naturally, in your privacy policy and elsewhere, you state that, and it may stop the very small proportion, but still that exists, who are forced to take out money. It might be a good tool to solve for that.
Yeah. Perhaps that is the proper answer. Is it wouldn't be a still image, but perhaps a recording. You could have voice recognition, you could have facial recognition, you can watch for micro expressions and things like that. That would be a really interesting place to delve into. Okay, so we've got to wrap up, and I apologize again for the late start, but really want to let this have its due. This panel is, again, one of those that I was truly looking forward to, and as Charlie said, perhaps the most consequential. So well done, all of you. Julie, thanks so much. You did a brilliant job. Charlie and Husayn, thanks for joining us. And we'll be back in just a moment with our next session.